investors have seen in their lifetime when this crash is done. But you don't want to try to be a hero and pick the exact bottom.
I prefer to call it a collapse rather than a crash. That's a very emotive word.
There's this big, beautiful economy that actually was rolling pretty good with jobs and inflation coming down. Feels more like the Game of Thrones Red Wedding.
We see European NATO allies who are canceling contracts for American planes, for other weapons they were going to buy from American manufacturers, because they do not trust us anymore.
We will see some products actually be raised in price because companies will pass on the cost of tariffs to consumers.
When even Maria Bartiromo, one of Trump's loudest cheerleaders, is flat out asking a U.S. senator if Congress should step in to stop the market from bleeding out, all thanks to our very stable genius. That's not just a red flag, that's a siren. Things aren't just bad, they're spiraling.
Panic, bloodbath doesn't even begin to cut it. And you look at the declines on the region's benchmark, worst since 2008. It is across all asset classes. We're seeing the reeling from this ramped up tariff war. And it is also across geographies, across sectors when you're looking at stocks. Really interesting as well. The likes of the Singapore benchmark, normally seen as very stable, plunging by the most on record. That tells you a lot. The difference this time around for traders that are looking for a reference, is this as bad as GFC or March 2020, is that if you're comparing this to the early days of the pandemic, Powell doesn't seem like he's willing or very eager to kind of swoop in with support. And for China, that's back from an extended weekend, it just shows you how they are also part of the tariff pain.
You know, there might be just a tiny bit of pain coming, but hey, don't worry.
So when I win, I will immediately bring prices down starting on day one.
They say they'll try their best. That's reassuring, right?
Look at what's happening. You got to see this today. I said we're going to try and get groceries down, right? An old-fashioned term, but a beautiful term.
So, how's that snake oil tasting now, Trump voters? After 4 years of screaming about inflation and gas prices under Biden, Fox News suddenly finds itself in a real bind, scrambling to deal with the fallout of the economy under the very guy they propped up. Total disarray.
We all saw the stock market soaring post-election. It reached an all-time high today, 82,000. Optimism everywhere. Just ignore the sky is falling reports in the regime press. Tune out the breathless reporting about market gyrations.
I'm excited about the economy. Look at the stock market. Our rocket ship is getting ready to take off in our economy with President Trump. We were probably overbloated with the stock market here for a while. We went up quite a bit.
You guys want to start with good news? The market's up 25% since you won. You tweeted this out that nobody in the media brings it up, so I said, you know what, I'm going to bring it up tonight.
Forget the stock market for a second here, and I have said on this program for years, it's never been my indicator in terms of the health of the economy.
The market always knows. So the market already started to kind of have this sort of rally, this sort of Trump rally. It's an energy, it's an electricity. We have to be very, very careful about all of this, and the notion that we have to react as Americans based on the market being down. So what?
The stock market is the only sign of life, and it's only going up because everyone thinks Trump is going to win the election. You can't really watch the stock market.
While some folks are busy writing the sequel to Don't Look Up Part 2. Yeah, I know the world ended in the first one, but if Fox News somehow survived the apocalypse, you can bet someone like Jeanine Pirro would call it a deep state hoax. Case in point, just last week she literally said on air that she doesn't care about her 401k because she's standing behind Donald Trump.
He's delivering. And you know what? I don't really care about my 401k today. You know what? Not that I can afford it. Not that it isn't important. Not that I'm not at a point in my life when I should be worried about my 401k, because I am. But this is what I believe. I believe in this man. And I believe that what we're seeing now with his bringing in $1 trillion in business and manufacturing and companies moving back to the United States.
Being that the economy is in shambles, we are barreling towards a recession, and there's only one man to blame. And if you're struggling to think about who, I'll give you a hint. He just became two-time club champion while your 401k dipped lower than George Bush dodging a shoe.
For people who are heavily invested in Wall Street, obviously that's a big deal. But at what point, Maria, do these effects on Wall Street start to have an effect on Main Street?
Well, it is going to have an effect on Main Street. Some things will become higher priced. We will see some products actually, be raised in price because companies will pass on the cost of tariffs to consumers. I would expect that. That's why you have some people saying that we could see a recession. We'll see a growth slowdown. This morning, Nancy Lazar, who I follow very closely, and I think she's terrific, from Piper Sandler, she says if the tariffs stay in place for at least the next 6 months, even if only 50% of the price shocks where we're seeing products go higher in price show through the economy, U.S. real GDP is on track to decline about 1% in the second quarter and in the third quarter, with unemployment rising. But look, President Trump told us that we were going to see a disruption. We are in that disruption right now. The bottom line is, when you're looking at this situation from 30,000 feet above, he's trying to rejigger the economy so that the U.S. is not reliant on China for prescription drugs or Taiwan for advanced semiconductor chips to try to get manufacturing here. So, yes, I do expect this to hit the main street and hit prices that will go higher. And that's why you're seeing this reaction in the market.
Yeah. We see European NATO allies who are canceling contracts for American planes, for other weapons they were going to buy from American manufacturers, because they do not trust us anymore. And I don't think there is any plan on the table that Russia will accept that will preserve Ukraine's territorial integrity. Last night, Putin sending missiles, sending bombs to Kyiv, to Zelensky's hometown, right? It is very clear what the Russians are doing here. And President Trump, who's talked about using tariffs as negotiating on a whole host of issues, put tariffs on uninhabited islands and did not put them on Russia. The administration is deporting at least one that we know of, Russian national activist who's opposed Putin. So this is part of a broader strategy, a part of a broader closing of ties between Putin and Trump that makes a lot of Republicans, or at least used to, incredibly nervous. Negotiations are challenging, right? Ukraine will likely have to give something up. The question is how much Trump will push them to give up in the service of Vladimir Putin.
The shift goes beyond Fox last week. Ben Shapiro voiced his concern.
President Trump declared that it was, in fact, Liberation Day. His giant tariff policy that he just dropped on the market unilaterally, probably unconstitutionally. Trump's reciprocal tariffs impose hundreds of billions of dollars in new taxes on Americans, be the largest tax increase since the Revenue Act of 1968. One of the biggest tax increases on American consumers in the history of America. And it's going to cost American consumers. It will cost American producers who use inputs from other countries. The Dow Jones Industrial Average plummeted immediately more than 1,000 points. The S&P 500 plummeted more than 3%. The NASDAQ plummeted almost 4.5%. There are real-world implications for this sort of stuff. Trade wars are, in fact, not good and not easy to win, particularly if you don't actually have a plan. It is predicated on a bad idea of how international trade works. A fundamental misunderstanding of trade deficits. Trade deficits they're an accounting procedure. Trade deficits have pretty much nothing to do with the health of an economy. I can name you a period in American history where there was a fairly large surplus in America's balance of trade. The entire Great Depression.
Thursday marked the worst day for the stock market since March 2020. And by early this morning, prices were tumbling yet again. Then, right around 6 a.m. Eastern, the China news dropped and stocks instantly doubled their losses.
JP Morgan upping its recession odds to 60%. From 40% previously.
Be clear. In the United States right now, 8% of workers are in manufacturing. 8%. 8. So how much more should it be? 16%? I don't know, but it's not, I don't think, I looked up what the new entry level of an automotive worker is today. It's about $25 an hour, $25 to $28 an hour. That's not a great job versus today. And Brad Smith, the president of Microsoft, talked about this last Monday, stating that we're going to have a shortage as large as 500,000 electricians in this country. Electricians today are paid over $150,000 a year, especially for the advanced electricians who are doing AI and all that. So there are many ways where we could create great jobs instead of this whole reordering. And so I believe the markets. I've always believed in the markets, and I believe the markets are telling you the real story. And the markets are telling it that story right now. Could the story be a little too negative now? Maybe. Could it be not negative? Not maybe too. I'm not here to suggest we're over this pathway. We'll have to see how this plays out. And so we're going to have to see how this plays out.
At the opening bell, the Dow was set to plunge nearly 970 points. The S&P
Thursday was the worst day for stocks since March 2020, and very early this morning, prices were falling again. Then, around 6 a.m. Eastern, the China news hit, and stocks doubled their losses. Now, we don't know if other countries will retaliate in the same way. We don't know the effect on corporate profits. We don't know the effect on inflation. Talk about uncertainty. The Dow set to lose about, let's see now, about 970 points at the opening bell. The S&P 500, 123. The Nasdaq down about 455.